Everyone's talking about meta platforms, ticker meta. The real question, buy or wait? I share the data. You make your own decisions. This is education, not advice. Over the next few minutes, I'll walk you through everything: the business, the chart, the fundamentals, what Wall Street thinks, and where the trade goes wrong. These are swing trade setups, roughly 15 to 30-day holds. Let's get into it. First, the business. If you can't explain what a company does, you have no business trading it. So, what is Meta Platforms? In plain terms, engages in the development of products that enable people to connect and share with friends and family through mobile devices, personal computers, virtual reality, VR headsets, and AI glasses. It's a communication services company and worth about $1.6 trillion. To put that in context, that puts it among the largest companies in the market, a mega cap, which usually means steadier moves and deep liquidity. Understanding the business tells you what moves the stock and whether a move has staying power. Now, let's talk timing. Let's read the price action. The technicals tell us about timing. Here's what they're saying right now. Two key levels on the chart: the 50-day moving average for the near-term direction and the 200-day for the bigger trend. Right now, Meta Platforms is trading about 1% above its 50-day and 5% below its 200-day. So the trend is on its side. On momentum, RSI measures how fast the stock has been moving. Above 70 means it's stretched. Below 30 means it's been beaten down. Here, it's a neutral, 61. Neither stretched nor washed out, which is a healthy place to enter from. Volume matters too. It's the conviction behind a move. This one is trading on about 2.3 times its average volume, which tells you real money is behind it. It's about 23% below its 52-week high, close enough that there's room to run back toward the highs. Now the fundamentals, because the business behind the chart is what makes a move stick. Is it growing, and is it cheap or pricey? On growth, earnings are up about 62% from a year ago, and revenue is up about 33%. Growth is the engine. A stock can have a great chart, but without earnings behind it, the move has no foundation. How expensive is it? About 17 times forward earnings. That's a fair valuation. Not cheap, not stretched. Two more angles to cover: the analyst consensus and any catalysts ahead. 58 analysts cover this stock, and the consensus is a strong buy. Don't trade on analyst ratings alone. They're a lagging indicator at best, but they tell you whether the smart money is aligned or pushing back. Now, the calendar, and this is important. Earnings are due in about 27 days. Earnings is the single biggest scheduled risk for a swing trade. The stock can gap 10% or more overnight in either direction, no matter how good the setup looks. So, if you take this, either size it small or plan to be out before the report. Don't get blindsided. Before we get to the risk, if this analysis is saving you time, a quick like tells YouTube to share it with other traders. Now, the part most people skip: where does the Meta Platforms trade go wrong? Let's start with the risk, because that's what you manage. The 50-day moving average is the key level. If price breaks below it and stays there, the short-term trend is broken. That's your signal to step aside. On the flip side, if support holds and the trend continues, higher prices are the path of least resistance. That's the move you're positioning for. My rule: plan the exit first, keep the position small enough that you can be wrong without pain, and cut it if the level breaks. That's what keeps you in the game long term. Now let's weigh Meta Platforms honestly. The bull case versus the bear case by the numbers. First, the bull case. What's working? Earnings up 62% from a year ago. Revenue up 33%. Wall Street agrees. 58 analysts rate it a buy. Real conviction. Volume 2.3 times its average. But here's the bear case. The risks. Earnings in 27 days. A binary event mid-trade below its 200-day. The long-term trend isn't confirmed. Both sides laid out: the reward and the risk. You decide which case is stronger. Let's look at exactly what my scanner found on Meta. 30 out of 100 scored pass. What's driving the score? MACD is bullish. Momentum line above signal. RSI in the healthy momentum zone at 58. Not overbought. What's working against it? Underperforming SPY over the last 3 months. 22.8% below the 52-week high. Lacks full leadership yet. That's the full data behind the score. Not an opinion, just the numbers. Meta Platforms. This is a watch for me, not a buy yet. The direction looks right, but the entry is not ideal. I want a tighter setup before committing capital. Let it come to you rather than chasing. Found this useful. Tomorrow, I am previewing this week's scanner scorecard. Did the picks deliver? Subscribe to find out. Subscribe so you do not miss it. Whatever you decide, do your own research and size your trades so no single position can hurt you.